All right, welcome everybody. My name is Jesse Randall. I'm the founder and CEO of Sweater. We are your hosts today for Founder Saga. And our whole purpose is to open up the venture ecosystem so that anybody can invest. And we're really excited, especially now, lots of positive momentum behind us. And so we're excited to be bringing that to you. But in the meantime, our value here to you is lining up successful founders who have made it through the ringer and who have stories to share about what it's really like to be in the trenches. And to come out the other side, maybe not unscathed, right? But definitely experienced and with things that I think we can all learn from them. So today, I'm really excited to have Luke Johnson with us from Neat Capital here in Boulder, Colorado. So welcome, Luke.
Glad to be here.
Yeah.
Thanks for having me.
Oh yeah, of course. So I know you're a skier, first of all. So is this background you have someplace you've been before?
Oh, for sure. Yeah, that was, you like that? It's taken with my iPhone. Anyway, yeah, that's in BC.
Oh, nice.
Skiing's my passion. Everybody in Boulder seems to have some sort of outdoor passion, and that's mine.
Oh, that's awesome. Yeah, I'm not quite as cool as you. I'm relearning how to ski, but I do like being outdoors myself.
That counts totally. It's harder to relearn.
Yeah. Well, one day I want you to drop me out of a helicopter with you. Okay, that's going to be your life goal.
Awesome.
Well, I mean, let's start at the beginning. So this is the way that I usually like to jump into this. Most people probably aren't familiar with Neat Capital. So why don't we start with you just kind of describing Neat Capital's focus and, maybe some kind of indicator of, kind of your scope or your reach in the world, whatever you're comfortable sharing about kind of your traction and size or whatever. I'll hand the mic to you for a minute and just kind of give us the pitch. You've done it 1,000 times, right?
Sure. So Neat Capital is a home financing group, and the whole idea for Neat Capital was very, very simple from the outset. It was, how do we make a home loan in real time? So, similar to how you expect to, when you apply for a personal loan, a student loan, auto loan, credit card, whatever, when you engage in that transaction online, you expect to actually start and finish that transaction in really one session. In mortgage lending, it's kind of famous or infamous for, this really long, brutal, drawn out process with a ton of uncertainty and a lot of back and forth to even get to square one. And so our idea for Neat Capital was not just how do we take in a quick application or how do we compare rates online. It was how do we do, of course, all of that, but actually, get from beginning to end in our first session with a client, where by the time they complete an application, we have a completely approved, fully underwritten loan, fully documented loan, fully priced loan, so that we can say, hey, you're done here, go make a cash offer on a property. So the idea is that's not just faster, the certainty behind it is what makes it really nice, especially when you're bidding in a competitive environment and want to know that you'll close and can put a cash offer out and the like.
Mm-hmm.
So that's
awesome. Yeah. So, I mean, your background, how did you run into this? Actually, let me stop you. I want to come back and dive into that more. But I do just want to ask, from a presence perspective, like, where are you at in the market? I know that you've had a huge 2021 and 2022 is carrying forward. I know you raised a round recently. Is there any indicators that you can kind of provide everybody to give you an idea of where you're at?
So 2020 was just a crazy year for us. There's a lot of tailwinds, I should say, in the industry, a lot of growth in the industry, but most groups were growing, anywhere from 40% to maybe doubling in size. We started out the year at about 100 million in volume, and by about August, we were about 2.5 billion in loan applications. So we were growing about 25x in 8 months. Not many companies do that well, including us. We took kind of some pain along the way as well, and so we learned a lot through that journey about kind of how to scale, what's important, what are the key pieces to make this work, and we're fortunate enough to raise a round in Q4 so that this year can be a lot more smooth sailing as we grow and expand. So we're hiring our first person in human resources, and we're hiring, after being 150 people, and we, just like a lot of like those kind of building blocks that we had been like, we'll do that someday. We're finally kind of putting it in place so that we can actually scale this more, a little bit more thoughtfully. But it's, it's an exciting time for us because we're finally getting to do a lot of the things we've always wanted to do and grow this the right way. And I think last year proved that the demand was there. And now this year is all about, making for a controlled pattern where we can continue to execute, deliver a delightful product to consumers, and really just change this entire crazy journey that is home financing.
Yeah, that's fantastic. Geez, 25x growth in 12 months. That is wild. That is really wild. I mean, like your software platform. So, I mean, you were able to scale fairly well with it, I take it, but
we're a lender. Yeah, there's kind of more than software here, and that's the rub, right? So we're a lender. So we, of course, have to have financing facilities, and we have to have, teams to actually service clients and provide, and work through closing and all the rest that you would do as a lender. And so, there was, quite a bit more infrastructure that went into scaling that than like, printing more software. And so as a result, like again, last year was a huge school of hard knocks for us in learning, like, oh wow, there's a lot here to get our arms around. But I think it's been wonderful for this team to just like learn from all of that and, again, be way better positioned in 2021, where this is not as scary.
Yeah, yeah, no kidding. Well, congrats on the growth. I mean, that's really phenomenal. I don't think very many startups ever see that ever. So very cool. So why don't we go back and we can talk a little bit more about some of the origins here.
Sure.
So why don't you just give us the quick view? I mean, we jumped back, was it around 2015 that you originally started this?
Yeah, I have a long-standing history in this market. I was actually in the mortgage market during the subprime era. So I'd go evaluate all of the larger groups like securitizing these mortgage-backed securities back in the day. So I'd go look at Lehman Brothers or Bear Stearns or Credit Suisse or Goldman, those types of groups to evaluate their securitization platforms. I'd look at the larger lenders in the industry to determine if their operations were up to snuff. I'd look at the larger servicers in the industry. So, kind of had a really good basis, kind of soup to nuts, often helping like an investment bank buy a mortgage bank, for example, and understand what needed to change there, how the operation was set up, what leadership needed to, change over during that transition. I learned, so I knew I had a healthy context for this industry. But when 2007 occurred, I wanted out. I wanted out of the industry like a bad habit. And so I left the industry, as many of us did M&A for about 7 years. And it was fascinating, since I had left the industry, what had happened within mortgage is that at the exact same moment in time, when all of the rest of consumer finance became one session automated processes, you had mortgage going in the entirely opposite direction. So when I left the industry, the average timeline to produce a loan was around 7 days. Today, I just saw a statistic that it's like right now about 72 days to make a loan, which is just frighteningly long. So, it's actually been getting worse over time, not better. And even the technology that's been introduced to the market has not fundamentally changed really important components to how a mortgage is assembled, from a production perspective, which means that the customer journey is still back and forth, very manual, very uncertain, very lengthy, et cetera. So as all of these other segments of consumer finance have really taken off with fintech, mortgage went the other direction. And so I was like, knowing the market, knowing how large it was, mortgage, we always kind of take it for granted how big mortgage is. But mortgage is bigger than, if you look at student lending, personal lending, auto lending, credit cards, all forms collectively of all segments of consumer finance in one bucket. You have to then multiply that bucket times 4 to get to mortgage. And at this point, like, we have 2 fintech groups in mortgage, or maybe a couple more, but basically very few kind of pure play mortgage lenders in mortgage that are fintech groups that have built their own software, and we're one of them. So it's a massively big market and very few, players. And part of that is just it's heavily regulated. There's lots of barriers to entry, all of the kind of the normal shtick. But it doesn't, there's a huge problem, huge market, and we thought, let's get after this. Let's actually change this.
Yeah. Well, man, you're tackling the right market for sure. I mean, this whole thing is fascinating because, I mean, there is so much money that moves through this, but it's also so darn complicated. I mean, I imagine when you first started this, you probably had some pushback from people saying, why on earth would you do this to yourself, right? I mean, 'cause it's like the opportunity is clear, huge market, obviously, no software, like all these things, like, with the rest of the market trends with consumer finance. So obviously it makes sense, but what was the reaction like when you wanted to actually do this?
Well, think about that from even a founding team's perspective. Like, forget investors, forget customers, forget all the rest. But think about it from a founding team's perspective. We work in an industry where folks make quite a bit good. They make good income, and they have great compensation packages, et cetera. They've seen a ton of people try this and fail. And so as a result, there's like this healthy skepticism of like, will this ever work? Will this ever be interesting?
Right.
And all the rest. And you're convincing somebody to leave their day job and go try something and earn no money for a very long extended time period while you're getting this off the ground. Think about communicating with a developer about this. Like, as soon as the word mortgage comes out of your mouth, like, how unsexy can it get, right? Like, maybe title is a little bit less sexy than mortgage, but like either way, it's all, not interesting. Like, if you could be building like cool apps or, games or what have you, like trying to convince a developer of this actually relates to what you just started the question off with, which is complexity. Why this is interesting is that it is so complex, that it is so darn hard, that so many people have failed at this. And that's how we actually found our founding team, is like, look, this is exceedingly tough. This is wildly complicated and intricate, and that's why it's interesting.
Yeah. So so many things to dive in on. So on day one, I mean, what is the vision that you had on day one, what ended up actually happening, 5-6 years later?
Actually, yes. So I think, I just actually looked at, one of your initial questions was like the napkin question of like, what was on that napkin? And another co-founder of mine, Tom, and I recently, looked at that napkin, so to speak. And he took like we had a 30-minute meeting at Starbucks that ended up being, I think, 7 hours. And so, and if you know Tom, you'll know why that was. And he's like a very fast, smartest guy you've ever met in your life. And we worked through a lot of kind of what we wanted to accomplish in that first session together. And like just check down that list of like what we found important at the time is exactly what we've gotten after. And I don't think that there are many deviations at all from that plan. Of course, we've added some new features and stuff that we didn't initially envision in our first sit down together. But generally speaking, like, we're completely in line with that plan. And that's what's, made this a little bit easier, is that because we came from the industry, because we knew the intricacies of this challenge, there wasn't as much meandering of like, okay, well, maybe we have to pivot to be this type of company, or maybe that's not really the benefit here. We knew what we needed to get done. Now, did some of it take longer? Was funding far harder than we ever anticipated it to be? Sure. We think of this as like a complete no-brainer, like $10,000 in revenue per client, very low working capital model, a massive market with huge pain points and a clear solution. We thought all of that was like such a no-brainer. This would be super easy to fund. But what we didn't realize and didn't have a respect for was that many venture investors are not accustomed to investing in an operating business. They're investing in, many of them are accustomed to like SaaS or what have you. But as soon as you depart from that model and actually have an operating business, you actually have, like, for example, for us is, lending facilities to loan money and all of the intricacies that go around like building an actual financial services organization. that's when, like, you see heads in the room just explode with like, oh geez, I don't understand that, now I'm uncomfortable. Even if those are the same features that generate revenue and margin and all the rest, there's a deep sense of discomfort with operating businesses among a very large number of VCs and investors with large in startups, and certainly that changed this entire process.
Right. So if I know some of your story, basically by the time that, I mean, you have a lot to build, first of all, right? And you have to have financial support in specific ways in order to actually process loans. So you've got a lot of chicken and eggs that you're going after here. So like when you're examining this from day one, yeah, I mean, it was like 4 chickens and 6 eggs, right? I mean, there's just so many things, right?
I mean, none of this makes any sense. Even from a regulatory environment perspective, it's like, you need this before this, but there's no way you'll do that. And so, like
automatically locking you out, right?
Oh, totally. And there was so much of it, like, you needed basically a large amount of capital to proceed, but to get a large amount of capital, you need traction, which you weren't going to get, without, so it's just a large amount of this is chicken and egg. And even just like people buying loans from NEAT, we don't, we can't fund hundreds of millions of dollars of loans and just sit on them earning 3% yield, because it's not very, sexy from a venture investment, or, even for me, like, that's a tough investment thesis. And so we instead sell these loans, and that's how we make revenue. We make gain on sale and selling loans. Well, what's kind of interesting is that the people buying these loans want to see, like, oh, have you been in business for 5 years? And have you who else is buying your loans? Well, not anyone right now. So you kind of work through that. And so we ended up, like, our first counterparty approval came from a company that we knew was just about to go out of business. And we were like, hey, we won't ever send you a loan. Can you just write us an approval? We're going to use it with other people. So it's just, it's just like unbelievable stuff that we had to hack through to just actually, even though we were well known in this industry, I actually have a network here. My co-founders all had a network. We knew this industry inside and out. The only reason, like, that bank, that company that was going out of business wrote us an approval is because we had the network. But, but generally, like, we had to do all of that, and it was a multiplying factor where it's like, okay, now how are we going to do this? With a warehouse line, when you didn't have the money in the bank, we had to invent a new type of security. Like, basically, it's a hybrid between debt and equity to fund our business. We invented a new security to fund NEAT, which a bunch of startups have raised money on. And I welcome anybody to reach out to me if they're trying to basically boost their balance sheet and raise money for that. We're trying to popularize that investment vehicle to do that. I don't get anything out of it. I just want it to not be as esoteric as it was for us. But yeah, I mean, there's a lot of things we had to get through that were total chicken and egg or nonsensical.
Yeah. So I think it might be good, for those that aren't as familiar with mortgage as you are, for sure, and even me, if you lined out the big components, right, all the things that had to be lined up in order for this to work, how would you describe those elements?
So the big elements are, I guess, in mortgage, you first of all need licensure. And for that, you need a fax machine, by the way, which is funny. But then, but you need licensure, and you need they're very big on physical addresses, because that's what drives mortgage risk. But anyway, so anyway, you need licensure. You also need
is that state or federal?
State, because
or both.
Way more fun to deal with 50 different regulators than one. Because you now have 50 different, approval cycles, policies for updates and documents and all the rest, and it's just way more fun that way. So anyway, so you need, in any state that you're operating in, you need a separate license. In order to get that license, you need to have worked in this industry in the past. So it's kind of funny, like, if you're an entrepreneur that hasn't or don't have team members that have, it is far, far harder, actually impossible. And then the second step is that you need what I'd call, like, if you could broker loans without funding facilities, but as a broker, you're only an additional intermediary in the industry. You're not lending. You can't change the process of lending. You can't do anything as a broker outside of acquire a customer. So everything that comes out after acquiring a client, you can't do anything with, which is kind of, I don't know, if you're a fintech company that's trying to change the journey, that's disheartening. So if to be a lender, you actually need warehouse lines that would fund the loans that you're actually producing, the financing facilities that you use to actually fund loans with. And then you have to figure out, okay, where are these loans going? Who is buying them ultimately? And you have to have counterparty relationships with the investors that would buy this loan product. So you're kind of setting up a little bit of a mini marketplace where you're trying to source demand from clients. You're trying to, fund that demand and then sell that demand into a completely different secondary market. And so you're setting all of that up. And a lot of that, is very dependent upon your credibility as an organization of like, okay, well, why would we buy your, how do we know you're not a shyster making fraudulent loans or whatever? And so anyway, that's kind of how it gets set up.
Yeah, that's fantastic. Okay, so I mean, I guess that you get it all set up, and then you still have the challenge of actually getting consumers to trust you, right? Because I mean, when you compare you guys to Wells Fargo or some big brand, that I mean, this is a big purchase, right? Oh, so yeah. What was your strategy for kind of getting over the hump there and getting transactions done so that you could actually point to the fact that you could do it successfully?
What I would say about that is that was an area we did not innovate in. And so, meaning we knew that from the industry that we were already breaking a whole bunch of rules in terms of like how this is done and what's typical and all the rest.
Yeah.
Not rules,
not literal rules.
Not regulations. I'm saying like rules of the game, so to speak, of like how is this traditionally done. And so we knew that there was immense business risk in executing on our tech plan, in executing on our funding plan, and all the rest. And we didn't want to create additional customer acquisition risk in our model. And so out of necessity, partly because we were very poorly funded at the outset, we basically said, we know what works in this industry. So let's work with experienced salespeople that are already have a book of business, that aren't having to go figure out how to find it and where it comes from and all the rest, that can just work for us as employees, dedicated employees of Neat, and work on this great, amazing new fintech platform and send their volume exclusively to us as one does if they're a licensed loan officer by law. And so it was really a recruiting game for us where we went out and recruited like top tier talent in this industry to work for this organization. And so that's what we did. We built like what's called kind of a retail sales force. Kind of like if you're familiar with insurance, like, those are the insurance agents that, are in the, at State Farm or what have you, that just exclusively send their clients to State Farm. And so that's what we did is we developed kind of this retail workforce. And there are some advantages out of that. The trust is the number one piece of that because, the real estate group that had always been working with Justin, always knew that Justin would have their back and would never get them into some bad situation. And so, there was a lot of credibility that bought. It also was a variable cost model where we weren't investing in the hope of clients. It was like, we pay when there is a client. And so that cut out a lot of, uncertainty from our equation in relation to like, how do we invest in customer acquisition?
That's so fascinating. I mean, you had so many moving parts that were all interreliant just to get the thing set up. And then you still have to go out and sell it and create up these other networks, right? In order to garner up the credibility. All right, this is even more challenging than I thought it was when we were first talking. And even after all my conversations with Chad, like this is even more it's I mean, cumbersome is probably the right word, right? I mean, this is a big, hairy, nasty problem.
That's why it's fun.
It's a challenge, right?
Yeah, that's why it's fun. And maybe and even how we did make choices that made this harder upon ourselves, right? So we for example, the way we entered this market was not to do anything but jumbo loans, which in what that means is that we were only making large balance loans. So what that means is that we're making the hardest to produce mortgage in the industry from a literal, like, the works of producing a loan and underwriting it, because these folks have 17 tax returns, 15 other properties, they're self-employed. They have many of them are divorced for whatever reason. And so like you have all of these kind of financial issues that you're kind of evaluating with each and every loan. And you're trying to do that with this new software that you've developed. And every loan that you fund is massive. So there's like, that can't go wrong, and so like, there's just like, a lot there that we, we were probably a little bit, I don't know, overly optimistic in trying to bite that slot out of the market. But it did set us up for success, because when we tackled the hard problems earlier on, everything else became easy afterwards. Like setting up conventional W-2 Fannie Mae loans was like, that was a layup afterwards. So like the software was built with flexibility. Everything just became easier as it clicked. Now, starting was hard, but
yeah. So I want to ask about that time frame. I mean, how long did it take from the time you guys had that 7-hour back of napkin meeting at a Starbucks until you actually processed your first loan?
I think it was approximately forever. 3 lifetimes.
That's a unit of measurement, right? Yeah. Inside startup world.
Forever. So yeah, it took forever. There was so much that had to have happen, and candidly, one of the reasons that it took forever for us is that we were just inadequately funded. We never had raised, more than a couple $1 million in any period. And, to be in mortgage, that's a $20 million problem. Everybody knows that. You're not a legitimate bank unless you have some funding. And so a mortgage bank, I should say. There's, and that was just such a challenge with like getting over certain hurdles in this industry, even who we could sell loans to, how our financing facilities came into play, who would join our team. All of that was constrained with funding. And so, I think like, of course, now we're over that finish line finally, not finish line, starting line. But like, we're finally there on the funding side. So like now it's like a dream world of like, we've always wanted to do X, let's get after X. And that makes this like even more exciting. That's persevering through those times was like, a big challenge, because it did take a long time when we didn't have adequate funding, and we didn't, at one point we had to shut down the company for 6 weeks, where we laid off 100% of our employees on like December 5th, right before Christmas and all the rest, the holidays. What's fascinating though is that to come out of that, we bought another company with my stock. That company was cash flow positive, and they invested in Neat. And subsequently, we had this great plan going forward. And then every single person at Neat came back on January 7th or whatever. So like we're out of commission for a month, and every single person, even our development team, just everybody came back, which was just, it's just heartening to see that like people in this group certainly had other jobs that they could go find. We have like a terrifically talented tech team and all the rest, super well known in the area. And man, like they wanted to see this through. They wanted to see this project through. They were super, super passionate about it and continue to be so. So, there's been so many moments like that for us where it's like we've kind of pushed through, even though things were not going in our favor. But yeah,
man, what an event! That's a crazy event in the middle of a company. So wait. Did you say you actually had to go and acquire another company, and then you used its cash to invest into Neat to keep it going? Yep. That's wild.
Yeah,
wow.
And we had to do that in a way that wasn't dilutive to everyone. If you can imagine, you're kind of desperate when everybody's laid off, right? Like so like there's an element of that, right? But so I took my own stock and made that like that's what they bought into, is my own stock in the company. So it wasn't dilutive to the rest of the team. So when the team kind of entered back into the organization, they weren't, it wasn't like a crazy down round or like everybody had to be depressed about the future. We could pick up right where we left off.
Yeah. That's incredible. Well, hats off to you for pulling that off. I don't think I've ever heard of that situation taking place.
We got to be creative
Seriously.
when things happen, right? Like so.
Yeah. Well,
So
my
we've never
God.
had any kind of, and that's not just due to me. It's all the co-founders and the rest of the team really helped put that together. So, we, but yeah, like there's when a team is passionate about something, they can absolutely do it if they're dedicated and committed to it.
Yeah, no, I love it. So something I talk about a lot is just like surviving, right? I mean, you're on a long track here, right? I mean, and I think survival can be broken into many different categories. So when I say, founders need to go out and survive this kind of situation, what was your personal survival plan? Like just to manage through this very long path you've been down? How did you approach that?
So I mean, first, that's a good question, and I'm going to struggle with that one, and because it's a good question. For me, I think like, during that time period, there were many events in my personal life that made that even harder. During, when we shut down, for example, and what was super helpful is to have founders at my back that were just relentless. I mean, just completely absurdly and ridiculously relentless. And that's what caused, this company to survive, is not certainly just me, but the team involved in this entire effort. Because like one of my co-founders is a dog with a bone. You cannot pull it out of his mouth if he has it, and he's like, no, this will work. What's the problem? It's like, well, we did just shut down. It's funny, the relentless optimism is a helpful dynamic on the team. I came from like a big business operating environment where we all, not having 90 days of cash in the bank and that kind of stuff was a major, like lights on, this is a problem. And now I'm immersed in this other scene where that's a very different style. And so anyway, for me, what's kind of gotten me through is just how, personally passionate I am about this project and how fun it is to just kind of work through this, and really the people around me, of course. I just get so much energy from like learning from this great team. That's if anybody on my team kind of knows me, I get my energy from not just like seeing the funding number in the bank, but also like, having a team around me that like I'm inspired by and I can learn from and all the rest. And that's how I've gotten through. But it's also been helpful. Like personally, it's helpful for me to have something that's what I'd call a very intense activity. And so, everybody has their own like different style of spiritualism and meditation and, focus and dedication. Like for me, the reason I like skiing is because it's intense. I can think of nothing else on the planet outside of what I'm doing. And the same is true of working at Neat. When I'm here, it's very intense. And like, I enjoy that. And it's almost meditative in a way for me to have like singular focus.
Yeah, no, that's a fantastic answer. So usually I like to take kind of the last 5 minutes and just hand it back to you, and say that there's all kinds of people that listen to this, right? There are folks that are deep in the trenches that may be going through, that forever measurement unit, as you described it, right? And might find themselves in a place where they're wondering what they're doing or how they're going to survive the situation. And then there's lots of people who, want to kind of looking from the outside, might be sitting on the fence, deciding whether or not they want to come in. So what would you say to these other founders that might be a few steps behind you?
First of all, reach out. I'd love to help. It's this community is only as good as we make it. And so, I think like, I love, investing and building into this ecosystem, not like personally because I don't have money, but, but as far as, as far as, like helping other people out at other startups, we love doing that. And if you're on the fence about, kind of the product, like if you don't believe in what you're doing from a product perspective, I think and you don't believe that there might be value proposition there, That's a very, very different problem than I'm trying to get funding and the product is great, or I'm really struggling to build a team. The product is excellent, but if you at least start with a useful value proposition that people will certainly pay for and love and enjoy and all the rest, then I think you've accomplished so much already that you should probably double down. If you haven't, and you're still kind of refining product market fit of determining is this useful or what have you, that's when it becomes a lot harder to say, do I stick with this until this next iteration and it becomes useful? That's a lot tougher through the tough spots is when you're still finding that. Even as crazy as our journey was, we never had that product problem that I know, and I'm not, I guess, looking down upon that because I know it's just such a natural evolution of so many other startups that, we were at least blessed with not having to worry about that piece of it,
Mm-hmm.
But anyway, I don't think it's easy for anyone. And, you can always tell when an entrepreneur is lying when they're like, oh yeah, everything's fine. It's perfect. Things are just easy. If you ever have that style of conversation with another entrepreneur, I'm sure they're not telling you the full story.
You gotta cut through the crap there.
but anyway, we'll tell you how it is, and if there's any way I can ever be of help, we're always out there.
Yeah, that's awesome. I love your story. And I suppose I'm a little bit more familiar with it than many folks, just because I've known Chad for a couple of years now. And I appreciate what you guys have built. You took on truly the David versus Goliath, and you figured out how to make it work. And I'm just incredibly impressed with what you guys have been able to achieve. And thank goodness for the windfall that came this last year, right? And I hope that carries forward.
It's still just beginning. We're just so excited to get after it for us. We still see so much unfinished here that we need to get after. So anyway, appreciate you having me, and thanks to you and Chad as well. And wish you all the best in your journey at Sweater. That's also super exciting.
Yeah, well, thank you. Appreciate you spending time with us. As soon as I got this thing all finished up, I'll send you a copy so you can share it.
All right.
And thanks everyone for joining us today. We've got another interview here in 15 minutes with Brett Larson from eVisit if you have time to hang around. But otherwise, thanks again. So much to have you. It's so good to have you on here with us, Luke.
Awesome. Thanks, Jesse. Take care.